There's a $200 billion company crushing its earnings right now, and it's not making chips. I'm Alex Carter. Welcome back to Wealth Signal. While everyone is fighting over the same 5 or 6 AI chip stocks, there's a quieter trade happening underneath the surface. I went through a recent breakdown of this sector, stock by stock, and the numbers are bigger than most people realize. If you care about finding the next layer of the AI trade before Wall Street fully prices it in, hit subscribe right now. Today, we're breaking down 3 companies most investors have never heard of, and why they sit right at the center of the entire AI build-out. One of them is up nearly 500% this year, and I'm going to tell you at the end why that might not mean what you think it means. Here's something most people miss about AI data centers. They are not just chips and software. There are 5 layers that make them work. Infrastructure, the land and the buildings. Power, the utilities and generators. Cooling, because all of that hardware runs hot. Compute and memory, the actual brain of the system. And one more layer most people skip right past: networking and connectivity. For 50 years, every piece of data that moved across this planet traveled through copper wire. Every email, every phone call, every stock trade. Copper. Now, in less than 5 years, that entire infrastructure is being replaced. Not upgraded, replaced. Fiber, glass, light instead of electricity. Why? Less latency, less heat, and less heat means lower cooling costs. This is not a 2026 story. These deals run through 2030 and beyond. And the scale of money behind this shift is hard to even picture. Total AI infrastructure spending is approaching $1 trillion. That money has to land somewhere, and a lot of it is landing in companies most people have never even considered. And inside this optics shift, there are companies sitting at completely different points of the chain. Let's start with the one most people have never even heard of. Amphenol. Ticker APH. Never heard of it? Most people haven't, and that is exactly the point. They are not making the lasers, they are not making the chips. They make the connectors, the cables and assemblies that physically link every rack, every server, every system together. This is a $200 billion company. Their latest quarter brought in $7.62 billion in revenue, well above the $7.08 billion Wall Street expected. Earnings beat too, and they raised their own guidance higher. Here's what's interesting. This stock is already up about 71% over the past year, so the obvious question is, did we miss it? Based on the numbers, not yet. Analysts are still revising their estimates higher, and the growth story is projected to run with double-digit revenue and earnings growth out to 2028. This looks less like a finished move and more like a name Wall Street is still catching up to. Now, the next name on this list is one you've probably already heard of, but maybe not for this reason. If you're finding value in this breakdown, drop a like. It genuinely helps this channel grow. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. Corning. Ticker GLW. This one, a lot of you already know, but probably not like this. Corning has been around for over 170 years. They made the glass for Thomas Edison's original light bulbs. They made the screen on your first LCD television. They made the glass on your iPhone. And now, the fiber cable carrying AI data between continents? That's Corning too. Same company, every single time. They're not just a glass company anymore. They are the manufacturing center of the next generation of fiber optic cables, and they just landed deals that change the scale of this entire business. There's a deal with Nvidia to grow their US-based optical connectivity by 10 times, and boost U.S. fiber capacity by more than 50%. Then a separate multi-billion-dollar deal with Amazon for U.S. fiber manufacturing. At a recent J.P. Morgan conference, Corning said their sales run rate should hit $20 billion by the end of this year, $30 billion by 2028, and $40 billion by 2030. And here's the part most headlines miss. The Nvidia deal isn't just a sales contract on paper. Part of it is funding to actually build new U.S. manufacturing capacity that doesn't exist yet. That tells you something important. There isn't enough of this component to go around right now. The supply chain itself is being built from scratch, in real time. Now here's the natural pushback. This stock has already had a massive run, so is the easy money already gone? Look at the earnings path instead of the chart. EPS is expected to go from $3.19 this year to $4.21, then to $5.75 by 2028. If those numbers hold, or get revised higher the way Amphenol's did, the stock has room to keep up with the growth, not just react to it. Our last name today is the riskiest one, but it might also be sitting on the biggest opportunity of the three.
Ciena, ticker CIEN.
Think of this company as the traffic cop of the entire network. They're not generating the light or laying the cable. They are making sure every signal, every packet of data gets exactly where it needs to go, across massive distributed AI systems. Last quarter, earnings came in at $1.64, beating estimates of $1.46. Revenue beat too. They raised full-year guidance to $6.3 billion, above the $6.15 billion expected, and they specifically called out margin expansion. Here's what concerns some investors right now. This stock is up nearly 500% this year, and it's currently pulling back. But that pullback looks mechanical, not fundamental. It's lining up with index rebalancing, money getting shuffled around regardless of the business itself. Meanwhile, earnings are projected to go from $6.53 this year to $9.65 next year to $14.28 after that. When earnings keep climbing like that, pullbacks tend to become entry points, not warning signs. So, now that we've looked at all three, let's put them side by side. Before we rank them, let's deal with the question a lot of you are probably thinking right now. These stocks have already run hard. Isn't this just an AI bubble waiting to pop? Here's the thing to understand. There's a real difference between a mechanical pullback and a fear-driven one. A mechanical pullback happens because of things like index rebalancing, big funds shuffling money around for technical reasons that have nothing to do with the business. A fear-driven pullback happens because investors genuinely think the story is broken. Ciena's recent dip looks like the first kind, not the second. And when you zoom out, money isn't actually leaving this market. It's rotating. 1 month, it's chips. The next month, it's memory and storage. Right now, it's starting to flow into optics. That's not a bubble deflating. That's a theme spreading wider. And there's a pattern worth knowing here. Just like with Micron last year, analysts sat on flat estimates for months, then suddenly raised them all at once when the earnings became impossible to ignore. The same lag is happening right now with this whole optics group. Wall Street isn't ahead of this story. It's catching up to it. So, as long as the earnings keep climbing, and right now across all three of these companies they are, pullbacks like this tend to be entry points, not exit signals. Drop a comment below and tell me which one of these three you'd put your money on first. So let me rank them, from the most cautious play to the one with the highest upside. In third place on the risk curve, Corning. The biggest name, the most aggressive growth numbers, but also the most analyst attention already priced in. In second place, Amphenol. Steadier, more diversified, quietly beating estimates quarter after quarter with less noise. And in first place, the one I said at the beginning you needed to hear about, Ciena. Up nearly 500% this year. And here's what that actually means. The market already sees what's coming. But the earnings path from 653 this year to 965 to 1428 after that, that's not a stock that's finished moving. That's a stock where the story is still being written. The pullback you're seeing right now? Based on the numbers, it looks mechanical, not a sign the story is broken. Here's the bigger lesson underneath all three of these. The AI story isn't just chips. It's every single layer underneath them: power, cooling, and the connections most people never even think about. This is my analysis based on research, not financial advice. Your situation is different from mine, so always do your own homework before putting money into anything. If this gave you a piece of the AI story you hadn't seen before, hit like. Subscribe with notifications on, because we cover this space constantly. And comment which of these three you're watching closest. I read every single one. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next time, we're going even deeper into one of the biggest bottlenecks in the entire AI build-out. I'm Alex Carter, and I'll see you in the next one.